You've described today's budget as likely to be a modest package. Tell us about your expectations for what we're likely to hear from the Chancellor.
Well, I think it's worth thinking back to what we saw back in the budget of last year, the autumn statement. This is going to be the third in a row fiscal easing. They eased policy back in March last year, they did it in November, they're going to do it again. But it's probably going to be a bit less because the room for manoeuvre is quite limited. He's right up against his debt to GDP limit, and I think that's going to be weighing heavily on their minds. But they do want to provide a fiscal loosening because of the election which is coming this year.
So how can he actually strike this balance? Because at this stage, we're expecting changes to national insurance, a huge question mark whether he'll also change the basic rate for income tax. Tell us how he can deliver a budget that is actually saying to the voters, vote for us, but also not upset the markets at the same time.
Well, we're hearing a lot about all the possible policies which are going to loosen policies, the things with very big price tags. And you've got to ask the question, where is that money coming from? Is it going to be borrowed, or are they going to try and bring in tightening elsewhere to offset that? And I think it probably will be a combination of both. So what they'll do is to say, we've got some better news on the public finances, which we've heard over the last 3 months. We've got lower interest rates, we've got lower inflation, and all of that reduces the Chancellor's outgoings. So that's good news. But there will, with policies like cutting national insurance costing 10 billion, and that's just one policy, there's going to be a lot of other things that they need to do to reduce the deficit.